Deep in the red earth of southern Burkina Faso, a 5.7 kilograms gold bar, fresh from the smelter at the Kiaka mine, symbolizes a seismic shift in Africa's mining landscape.
We're setting up a local development fund, which will channel some of the money from the industry and allow people in mining areas to benefit from projects which can improve.
Unlike the past, where riches flowed straight to Swiss vaults or Dubai markets, this gold isn't going anywhere. It's staying put, marking the first major industrial pour under Burkina Faso's bold new mining laws. The Australian-owned West African Resources, WAF, delivered this milestone ahead of schedule, but the real story isn't corporate efficiency, it's who controls the gold. Under revised laws, Burkina Faso now claims up to 30% ownership in new mines, refines its own gold, and ensures profits fuel local development funds. No more unchecked extraction, no more raw exports. This bar is just the start. By 2030, Kiaka could produce 500,000 ounces annually, but Burkina Faso isn't just watching. It's rewriting the rules, demanding value over volume, and proving resource nationalism isn't just rhetoric. The message? Foreign investors are welcome, but the era of unchecked profit exporting is over. The gold game has changed, and the world is noticing. Beneath the headlines of Kiaka's first gold pour lies a seismic shift. Burkina Faso isn't just mining gold, it's rewriting the rules of the game. At a time when the nation is cracking down on illegal exports, building a national refinery, and asserting state control over strategic assets, that 5.7 kilograms bar is more than metal. It's proof the new system works. Kiaka isn't just another mine. Once a dormant giant, this 7 million ounce deposit became West African Resources' $1 billion bet when others retreated. The Australian firm didn't just acquire a gold project, it embraced Burkina Faso's high-stakes mining renaissance, where foreign investors must now navigate stricter local ownership rules, up to 30% state equity, and value-added processing mandates. Yet against odds, security risks, global volatility, WAF delivered Kiaka on time and under budget. Its success shatters the myth that African resource nationalism scares away investors. Instead, it proves partnerships can thrive when local empowerment and profit align. The ripple effects are already tangible, smelters humming, roads built and jobs multiplying in surrounding towns. But the true victory? Burkina Faso's gold now fuels its own future, not foreign vaults. This is mining on African terms, and the world is watching. Special thanks to the Black Post community for preserving our stories. Join us to keep this movement growing. For generations, Burkina Faso watched helplessly as their gold enriched foreign vaults while their communities remained impoverished. But the Kiaka mine has shattered this colonial legacy, producing gold under national oversight, feeding state equity, and fueling local development funds. This isn't just operational success, it's a blueprint for resource sovereignty, proving Burkina Faso can host world-class mining without surrendering control. Yet Kiaka is merely the opening act. The real revolution lies in Burkina Faso's bold legal overhaul of July 2024, a seismic rejection of neo-colonial mining models. No more sweetheart deals for foreign firms. The state now claims up to 30% ownership in new mines, transforming from passive tax collector to active shareholder. Mining giants can no longer just extract and export. They must employ locally, invest in communities, and contribute to a national development fund. But the masterstroke? SOBEMIB, a state-owned mining titan designed to operate, not just regulate. Already reclaiming mismanaged sites, it embodies Burkina Faso's ultimatum: exploit no more. With shortened permits, strict compliance, and profit-sharing mandates, the era of resource plunder is over. Support African sovereignty. Check out our march honoring leaders who champion self-determination. This isn't just reform, it's a complete reinvention of resource governance. Burkina Faso has moved beyond demanding a bigger slice of the pie. It's now controlling the bakery. While foreign firms like WAF still operate majority stakes, they do so under a radical new paradigm where the Burkina Faso state is an active economic architect, not a passive bystander. But true sovereignty isn't won in boardrooms, it's forged in refineries. That's why the Ouagadougou gold refinery, set to open in 2025, marks a historic rupture with centuries of colonial extraction. No more shipping raw gold to Dubai or Switzerland while receiving pennies on the dollar. This state-backed facility, with Asian and African partners, will process hundreds of kilos daily, slashing the invisible losses from underreporting and smuggling that once bled the nation dry. Yet the refinery is just one weapon in Burkina Faso's arsenal. The newly created SOBEMIB, National Mining Heritage Company, operates as the enforcement arm of this revolution, seizing underperforming mines, auditing suspect operators, and acting as both shareholder and sheriff in the gold sector. Backed by the military government, it's aggressively rewriting the rules, renegotiating contracts, punishing profit shifting, and ensuring mines serve Burkinabe interests first. This is vertical sovereignty in action. From extraction to refining to sale, Burkina Faso is building an unbroken chain of control. The message to foreign investors is clear. You're welcome to partner, but never to plunder. The era of resource colonialism ends here. Support African economic liberation. Like, share and subscribe for more hard-hitting analysis of Africa's rise. Burkina Faso has slammed shut the back door of gold smuggling by suspending small-scale export permits, a bold strike against decades of illicit trade that bled the nation dry. Now, with its soon-to-open Ouagadougou refinery, every ounce of legally mined gold must pass through state-controlled channels, transforming loose raw exports into a consolidated stream of audited, value-added wealth. This isn't just about transparency, it's about leverage. For the first time, Burkina Faso will set prices, track output, and, critically, weigh a seismic monetary possibility, backing its currency with gold reserves, potentially breaking free from the CFA franc's colonial leash. Yet gold's glitter means nothing if it doesn't reach the people. Past booms saw roads decay and schools crumble while foreign firms jetted out profits. Now the National Mining Development Fund, fueled by mandatory corporate contributions and SOBEMIB stakes, promises to redirect gold wealth into electrification, agriculture, and infrastructure. The real test? Whether this model uplifts villages or enriches elites. Geopolitically, Burkina Faso is pivoting hard. Rejecting Western donor dependency, it's embracing Russian, Chinese, and Turkish partnerships, deals trading minerals for infrastructure, not exploitation. Critics warn of isolation, but on the ground, this feels like liberation. The goal? To flip gold from a symbol of vulnerability into the foundation of a self-determined future. The revolution won't be televised. It'll be smelted, stamped, and spent on Burkinabe terms. Burkina Faso stands at a crossroads of history. With its new gold refinery operational and mining reforms in place, the nation now holds unprecedented power to transform mineral wealth into real progress. But will these golden streams fund rural clinics in Gawa, fix Dori's crumbling roads, or train Koudougou's next generation? The bitter truth remains. Gold builds nothing unless intentionally invested. This is Burkina Faso's moment to prove resource wealth can mean school desks instead of Swiss vaults, vaccines rather than luxury imports. The machinery of change is now in motion, but only if the people truly benefit will this revolution shine brighter than the gold itself. What future do you see for Burkina Faso? Join the conversation below.